Welcome to the committee meeting today. We have two presentations I hope you find interesting. Please turn off your cell phones to silent. And I would ask that Representative Brock Colvin open our meeting in prayer.
Thank you. Let us pray. Dear Lord, we come to you today seeking your guidance and your wisdom as we make decisions on behalf of the people of Alabama. Lord, it's such a blessing to represent our citizens across this great state. And Lord, we just ask that you be with us. Thank you for allowing us to serve this state and our country, Lord, safely. And Lord, we ask that everything we do, Lord, that we think of you and the people above all. And Lord, we ask you to be with us this morning. And thank you so much for sending your Son to die on the cross to forgive us of our sins. And we ask this in Jesus' name. Amen.
Amen. Thank you. Clerk will call the roll.
Chairman Garrett.
Here.
Representative Keel.
Here.
Representative Drummond. Representative Almond. Here. Representative Baker.
Here.
Representative Chestnut.
Here.
Representative Collins. Here. Representative Colvin. Representative Daniels. Representative Ellis. Here. Representative Faulkner. Here. Representative Lawrence. Representative Lovern. Representative Stubbs.
Here.
Representative Wood.
Thank you. This morning, we have a few members that are in other meetings, and I think a few members have to slip out for some meetings, so we want to be mindful of that. Make a very quick comment about the CHOOSE Act, which is the School Choice Act, that I believe will be in the Senate committee today. That bill needs to originate in the House. The question is, we may be looking at that next week, or it may not be next week. The timing is kind of an issue. So when that bill comes up, we will have a public hearing, and then we'll have a committee vote, and then we'll, of course, take it to the floor. But in advance of that, I know some of you may have questions. We haven't had a chance to sit down and discuss it. If you have questions individually, I'll be happy to meet with you. Also trying to set up a time when I can be available just to both caucuses to kind of make sure they understand what's in the bill. So it may move from the Senate today, we'll see, but it will have to originate down here, and we'll be working on that in the future. Let you know as soon as possible. So today we have a couple of presentations that I think you'll find interesting. The first would be by Representative Almond. We asked her because of her interest in the subject on tax exemptions and our policies on that. And so she has had a subcommittee that's done some work, and we look forward to hearing your report. Thank you. Sure. However you're more comfortable. Okay. You need the clicker. Let me also mention before you get started, Karen will distribute, or will have available for you sometime today, copies of the governor's, the ETF budget bills package that the governor sent over, as well as a spreadsheet prepared by LFO. So she will get that information to you hopefully today or tomorrow to the committee members. Thank you.
Thank you, Mr. Chairman, committee. Good morning. And yes, I am going to spend just a few minutes discussing with you some of the things I learned over the summer and the fall working on the nonprofit tax exemptions that we have in our state. The first thing that I'll tell you that I learned is as you sit in your seats and things come to you that you think are wrong or need fixing or don't quite seem right, and you feel the urge to speak out about it, I'm just going to ask that you sit there a little bit longer, let that feeling pass. Otherwise, you too will find yourself up here giving a presentation on how to fix things. So that's the first piece of advice I have for you. I do want to thank Dustin Jones with LSA, Cameron Clark, Mary Mitchell with Department of Revenue. They spent quite a bit of time with me this summer going over all of this, and we did a lot of research, and I want to just try to highlight that for you and then sort of tell you where we landed and get direction really from the committee on how to go from there. So again, my problem with our granting of tax exempt statuses to nonprofits was this. It seemed to me that it was, a legislator comes to us and they request that this nonprofit entity from home be granted tax exempt status. That's about all the information we get, maybe a little bit more information from the legislator about what the entity is and what they do. We have no financial information or any other way to analyze whether this would be a good thing or a bad thing. And it seemed to me that it was too political a process for something that really should be more of an analysis than political. If we liked the legislator, we were more likely to vote for the nonprofit tax exempt status. If we didn't like them, sometimes we'd send them somewhere else. So, I mean, that's just the way it's worked for years. And that just
Please be candid in your comments.
seemed to me there might be a better way to do it. So just briefly overview, our code Title 40, Chapter 9 has several statutes that deal with the granting of a tax-exempt status to nonprofits. We have some entities that are specifically listed, such as the Boys and Girls Club of West Alabama, and others are by categories, such as, I'll just throw out food banks. So we have a conglomeration of all that, and there are just long lists, if you've ever looked at the code, of both of these things, sometimes all running together. So that's the way we currently do it. Just because you're a 501c3, which is a federal tax exemption status, does not mean that you necessarily have state tax exemption status. You either have to fall into one of the categories that already exists, or you have to come before the legislature and request it. A few years ago, Terry Collins, Alan Baker, and probably more of you worked on adding the United Way agencies in as a category, which I do think broadened it quite a bit. In other words, once you are accepted by your local United Way agency as a covered entity there, then you're automatically come under their umbrella and you can qualify to be considered for tax exempt status. In addition to that, I believe at that same time, you all implemented this current process, and I'm looking at whoever's running maybe it's me. There we go. I'm starting, nope, I'm going to start here. Sorry. All right, here we go. I'm looking at this, this right here. You should have that in front of you. We started, first of all, by looking to see what other states do in this area, okay? And Dustin did all this research in his office and determined there are basically 4 broad classifications. They're statutory, broad, limited, and refunded, and then some states do none. We are, if you turn over to the second page, we are by and large a statutory state. And that means just what I just went over, that you have to be specifically enumerated in the statute in order to qualify for tax-exempt status. The broad category, and if you turn over to the next page, you're actually going to see all the states that, it's easier to see all this. You can see most states actually fall in this broad category. And it's not black and white even in the categories, okay? Some of them are actually still a mixture, but generally, if you qualify as a 501c from the federal government, you also qualify for tax-exempt status in the state, okay? And most states do that, which is a lot of nonprofits and a lot more than we currently qualify. A limited classification, specific and restricted exemptions from sales tax for certain goods or services. So they give you tax-exempt status for certain things you buy or do. And then the 4th category is refunded. So you basically, nobody's exempt, but nonprofits basically go ahead and pay their sales tax at the time of purchase and can request to be reimbursed. And then there's some states that don't give any tax-exempt status to nonprofits, and you can see that category there. And then we looked at the states around us. What do they do? And you can see that on down in your memo. So that's generally what states around us do and the way other states in the country handle tax-exempt status for nonprofits. And if you go on to the second handout that you have there, so we talked about that with the Department of Revenue, and we asked the Department of Revenue to analyze, if we were to make a change, say to the broad category, what would this mean for them, and how would that impact our current process? So our current process, and I do believe this is what I started to say a minute ago, I do believe this was implemented when Terry and you all decided to take some companies under the umbrella of the United Way. We now have this, they have to apply, just because you got to first fall under a category that we already have, okay? Then you apply to the Department of Revenue for a tax certificate, and you have to have a tax certificate in order to be exempt from sales and use tax. And you have to do that every year, and that's what they're doing now. And they apply online through My Alabama Taxes. If you go to the Department of Revenue's website, you'll see a link there, and it's real clear. That's what they do. But each year they have to submit their financial information to get their tax certificate, and that's what we're doing now. And I think that is a great process, and that's what we should be doing. And because of that, we now have, I believe, a whole lot more information than we used to about, what nonprofits are doing out there. That part, we definitely think it should stay the same. They estimate that our current fiscal impact for our exempt entities, nonprofit exempt entities, right now is $73 million annually. Now, what I will add, that does not obviously take into account, number one, the good that these nonprofit entities do in our community, and number two, the services they provide, and if they weren't there, our local or state entities may be having to foot the bill for. So kind of keep that in mind as you look at that. And I think that number could definitely be offset, but who knows how to do that. All right, so that's what's happening currently. I'll say that they did not take a positive view on if we were to take the broad approach that most of the states do. They thought that would be entirely too burdensome on our Department of Revenue. We don't have the people to do it. We'd have to hire a whole bunch more people, and it would cost us a lot more money, and it'd have maybe almost $1.5 billion fiscal impact. Doesn't sound like a really good option there. They did propose towards the end, under department's proposal for exempt entity process, a two-pronged approach, possible two-pronged approach. Number one was they recognized when they started looking at their own website and what's out there for the public, that there really was no good clearinghouse for how to go through this process for people who are trying to go through it. And as an attorney, I have tried to go through this process for one of my clients, and that's also sort of what prompted me to be in tune with this issue. And they realized that they really needed to make some changes to their website and make it more clear. So they have made those changes. They are not on the website yet, but I believe they're coming soon. So that's something we can do for free, and that will be happening soon. So hopefully that'll make a big impact for people who go through the process. The second prong they suggested we could look at is really something that Georgia does, and they call it a statutory exemption with a limited approach. And so we have a draft bill that basically does this. It tries to go through, and Georgia basically has categories such as food banks, blood banks, nonprofit child care centers, hospitals, schools, that you have to fall into rather than naming specific entities that qualify. That's what they do. What we sort of drafted out is sort of a hybrid. Number one, keeping the very specifically named entities that we've already allowed to be recognized in our code sections, okay, as exempt from sales and use tax, but also try to have categories that we could all agree on made sense, so that if the Tuscaloosa Food Bank is already tax exempt, there really shouldn't be any need for the Birmingham Food Bank to have to come before us to get a separately recognized. Let's have categories that we could agree on, that they could just go straight to the Department of Revenue and cut some of this out, having to come to us. So that's sort of the approach that we've taken. It's not, there's no easy fix. You know, if you're trying to balance streamlining the process, the easiest streamline, well, any 501c3, let's let them be tax exempt and make their application. But that is an expensive hit to our budgets, and I think we all probably agree that's not really where we want to go right now. So trying to find something that sort of fits in the middle, that streamlines it but doesn't cost us a lot of money or any money, hopefully. So that's sort of what we tried to do with our draft, which I did not give you. I just am trying to tell you about it. And we would still keep the annual renewal of certificate of exemption in place, the required reporting, et cetera, that we have in place now. Again, that's what Georgia does. That's kind of the approach that we thought would work best for us. It would help cut down on applications coming to the legislature. It would take most of the politics out of it. But none of that works if our body is really not interested in doing that. So I'll just stop there and ask for any questions or comments.
Well, thank you. The work's very, very interesting, good information. So if I understand, you have a bill, and you haven't taken the categories that Georgia has. You've taken what we currently do and maybe taken some of what you've found in your research and come up with some categories that are not necessarily these we see on from Georgia, but. Well,
it's really both. Some overlapped anyway, and we've added a few categories that Georgia has that we didn't have.
And so this would still require, so everybody who would be in one of those categories would be eligible for this, but to actually obtain the exemption, they would have to go through the process annually to file a certificate and do all that. So
that's correct.
So, okay.
Which they're doing now anyway, having to do now.
And the bill you have, is there a fiscal note associated with that bill?
Not yet.
Okay.
I don't believe. Where's Dustin?
Do you anticipate it would be a large fiscal note or a significant fiscal note? Okay. Okay. All right. Any questions for Representative Almond? Representative Collins?
Thank you for your hard work. Yes, this is a very complicated
Yes,
issue.
I know you know.
I would like to know that fiscal note, and the fiscal note would be based just on the ones that you've added, right?
Yes.
Because some of them are already in that.
Correct.
Are schools not already included in that? They are. So even though they would be in there, that would be included. And I thought hospitals were as well. Okay. So some of those we don't have to really, they're not additions, they're there. They would still apply for the certificate and you would still collect. Have we seen that report on, I know they're supposed to be showing how much, and that's where you got the $73 million cost.
Yes, ma'am. Cameron Clark from the Department of Revenue. Yes, we actually do get that, and we usually provide that to Dustin's office, and it's available in the expenditure report every year.
Perfect. Okay, thank you.
I'm sorry, go ahead.
Last question on potential bill, because I've not seen it, is that I know to be a United Way agency, you have that 3 years of service. Is that in your bill for these broad categories?
It is
I like
not.
categories.
Yeah, I like categories too. It is not, the 3-year waiting period is not only for United Way agencies. We certainly could look at that.
I think it would keep fly by night, and I think it would be good. Thank you.
What's interesting to me, just as a side note, and I could be proven wrong, but my impression is that most of these exemptions that come before us, the fiscal notes are usually very, very small. You know, so okay, Representative Faulkner, did you have a question?
Yeah, so Cynthia, I was looking through all this, and I'm want to just try to understand what the proposal is. The difference between, because we seem to be statutory with limited, is the way I read this, and we're talking about Georgia statutory with limited. So other than maybe some new categories and providing education on the process, what would be the change that you recommend, perhaps?
I think that's pretty much it. And Dustin, you can correct me. You drafted it, so correct me if I'm wrong. But I do think it's actually just thinking through on the front end what categories make sense to us. First, codifying the categories we already have, if we agree that those should remain, and adding any new ones. Georgia has some that we don't have. Go ahead and add in those if we feel like that's a good thing to do. So that would broaden it a little bit more. And then hopefully that would reduce the ask before the legislature. And Dustin, you're welcome to, if Mr. Chairman gives you permission, you're welcome to correct me.
Yeah, sure, go ahead.
Yes, sir, Representative Faulkner. That's it's not quite a binary choice, but it's kind of a, do you want to go whole hog and all nonprofits, or then there's the none, but there are obviously some already exempted. So this is more of a looking at a select group that y'all, the legislature deems as worthy of being granted this status. And instead of doing it one by one, like y'all get the bills every year to do, this particular entity or this particular item, instead have groups that might catch some of those so they don't have to bring those before you. They hopefully would fall into one of those broad categories that provide that public good or service.
Well, I second that, and I know Representative Collins said this. That would be, I like that idea of us not having to deal with all these individuals that are very small in fiscal note. But, okay, thank you.
Representative Collins?
That made me have a second question too. Is there a cap on if their exemption is up to a certain amount, Dustin, or not so much?
That's not in the draft currently, but that concept could be included. And just to clarify, you're talking about limit the amount of purchases like annually that would qualify.
And it was just curious if y'all had done that.
Yeah.
That's what I was thinking. I do want to say thank you and Representative Baker was very involved, but Representative McMillan was as well.
Okay.
And we worked really hard on it and trying to get the report that so we can get a better estimate of what those exemptions are actually costing the state, and then having a group that would evaluate the value that they're bringing back. So I think you're on a good track.
Well, you're welcome. I think that process you all put in place at that time is really working well and has provided us lots of valuable information. So,
Representative Colvin?
Thank you, Mr. Chairman. Representative Almond, thank you for the presentation. I know your passion for this issue, so we appreciate that. Coincidentally, while you were giving that presentation, I had someone from my district text me asking them to grant their foundation a sales tax exemption. So let me know how we're going to handle this, because I need your help, looks like. So thank you.
One other thing I think the committee, as we look at a policy going forward, this is just a general statement. It's my opinion. I'm certainly open to other ideas, but we often on this committee grant exemptions for state, local, and county taxes. And I question whether we should be meddling in the county and city business. So I think that's something we ought to think about.
that's a great point, and that was something I meant to add, that there's no real rhyme or reason why some of these entities were granted just state tax exemptions and others were granted state and local tax exemptions, except that they asked for it and got it, or asked for it and didn't get it, or didn't ask for it at all. But there otherwise was no.
So I guess if we move forward, we ought to think about, do we want to address that and say that we're just addressing, that's just a thought. That's a discussion we should have. Representative Baker, do you have a question? No.
I did not, Mr. Chairman. I do very much agree with what you just shared. Going forward, then we may want to try to make it a little bit more uniform. So whether it's just relative to state, and then that way not to encroach on the locals' turf. So thank you.
Representative Faulkner?
Yeah, I had a quick follow-up, Representative Almond. Is like sometimes we have temporary sales tax exemptions for sporting events. The World Games and we give those. Would we have a category perhaps for that? Is that something, because they're just limited. They're in there for.
Well, my personal opinion is I think we want to have a structure and a process that takes care of 99.9% of what we do. I think that 0.1% we ought to talk about, because I think we're not trying to invite people to come in here and take money out of the funds. But I think I like the approach of having a structure and then also requiring annually that there's some accountability and some effort on the part of those entities to receive it. You just don't automatically get a check. You have
Yes.
Yeah. So. Any other questions? We got another presentation, but I'll be happy to entertain other questions or comments. Well, again, thank you. Great job.
Thank you
We
very
look
much.
forward to your next project.
Thank you.
Can you bring that clicker? I'm going to try to work here with it. So next, what I'd like to do is go through. I think the committee maybe has a copy of the presentation before you. I'll have a screen up here that I can present. This is basically just a summary and update of where we stand as a state on taxes and our reserves and our budgets. One comment we hear continuously is that we need to cut taxes, and Florida cut taxes and Mississippi did something or Texas did something. Alabama needs to do something. And I think we are certainly want to we want to be a low tax state. We are a low tax state, as this presentation will show. We want to continue that, but we need to be aware of the facts. So this basically just is going to summarize our facts. So let me see if I can find how to do this. Okay. So this is the planet chart that you have seen before. If our budget system were a planet, this is what we would look like. The Education Trust Fund is the largest budget, $10.4 billion. These are all currently updated numbers. You see the second largest budget we have, or fund we have, is the Alabama Trust Fund, $3.5 billion. There's two craters on that trust fund, the ETF rainy day account and the general fund rainy day account. You may leave that crater and go to either the general fund or the ETF, but you have to go back after a certain period of time, 10 years or 6 years, whichever the case may be. You see the general fund is a planet that's $3.24 billion. The Advancement Technology Fund today has $1.75 billion in it. The Road Fund has $1.5 billion. You'll notice that there's an SGF, that's this General Fund Reserve Fund of $150 million. There's an Budget Stabilization Fund Reserve of $702 million. Then there's the EORF, that is the new savings account, the Education Opportunity Fund, that is we passed, that basically we can access as a legislature. The reserve fund for the general fund can be accessed by the legislature, but the Budget Stabilization Fund has to be accessed only if in the event of proration. And the A&T, getting those rainy day accounts require proration. So the point is that just like in our world, you can't travel from planet to planet, you can't really move money from bucket to bucket without really literally an act of the legislature or sometimes a constitutional amendment. So this is a picture of what we would look like in the proportion of those. If you look at the next chart, this would show really the size of the education budget or the education receipts and the general fund receipts. If you took both what's appropriated by the legislature and also what comes from other sources. So the education is $23.9 billion, $8.8 billion last year from the legislature, and $15 billion from other sources, direct earmarks or federal, direct earmarks from the state or direct earmarks from the government, federal government. General appropriations, the general fund would have $21.5 billion. $3 billion from the appropriated legislature, but $18 billion from other sources. So you notice that the funds, even though we have a $9 billion education budget and a $3 billion general fund budget that we deal with, you can see the money actually in those funds are almost the same. If you look at our appropriations from the ETF, the Education Trust Fund, you can see this is what the growth has been. I've read reports that we've just skyrocketed and jumped all over the place, but this has really been the appropriation that's grown in concert with our growth. If you look at the ETF receipts, this just shows you the sources of that. 67% of the Education Trust Fund money comes from income tax. So when people go out there and say Alabama needs to cut the income tax, there's 67% of your education budget. Then the other big portion, of course, is the sales tax, which represents 25%. So the two largest components of the education budget are income and sales tax. And of course, those are both very volatile. So you'll see, unlike other states that have more stable income sources, we are subject to that volatility. And then you look at this is actually general fund receipts, I believe. It says income tax, ETF. This is general fund receipts. They have income from a lot of different sources. Just FYI. And I'll say this too, the Education Trust Fund is, the sales and income tax are generally considered growth revenue. Most of the revenue going into the general fund, which is this slide, is not growth revenue, except for the simplified seller's use tax, which 75% of that goes to the general fund. That's the only really growth revenue tax they have. So I won't belabor the point here much, but the Alabama Trust Fund has $3.5 billion. We can only access that through proration and through a vote of the people, if those events happen, we have $726 million that we can get from the rainy day account to the education trust fund, but it has to be paid back within 6 years. And this general fund has a $326 million they can access, must be paid back within 10 years. I'll skip on through to, everybody knows what the budget stabilization fund is. We have the advancement technology fund, which we'll deal with that requires a supplemental appropriation. So the budget stabilization fund, there's to the extent that it sets forth a cap that we can spend to. If we have revenue above that cap, then that revenue goes to a waterfall. Last year, we passed legislation to set a secondary cap, and money before it gets down the waterfall, some of that will go into this educational opportunity fund that we can access without proration, and then money, of course, waterfalls into the A&T fund, and that's what we can supplement and appropriate every year, and we'll, of course, do that this year. Road fund, $1.5 billion. That's not fed by anything except really gasoline taxes. We passed the gas tax increase several years ago after 27 years. And as a result of that, we've had about $1 billion in road spending that we otherwise would not have seen. I want to give you next just kind of an overview of what our state looks like from a tax standpoint. So if you look at Alabama's taxes and revenues, and I've compared in the yellow Florida, Georgia, Mississippi, Tennessee, and Texas. Those are states we tend to benchmark. This is the chart that shows income per capita by state. This, by the way, all this information is from the Tax Foundation report. You can see Alabama has a low income per capita, one of the lowest in the country. Mississippi's there at the very lowest. The state and local tax burden per capita as a percentage of income. Tax burden per capita as a percent of income, we are not as low. We're on the lowest end, but we're not high. We're down there fairly low, but you can see that's a percentage of income. That will speak to the fact that we're a low income state, one of the lower. So that's information there. If you look at where states get their tax revenue, so this on the left shows the United States. You can see that roughly a third of most states on average get a third of their tax revenue from property taxes. The orange is the general sales taxes. The gray is the individual income tax. The yellow is corporate income tax, and the top up there, the green, is the other taxes. So excise taxes. We'll talk about those. So you can see when you look at Alabama, what jumps out at you is that our property tax as a percent of our revenue collections is much lower than the average in the United States. Our sales tax seems to be much higher than the average state. The other categories seem to be similar, except for the excise taxes, which we'll delve into that in just a minute. If you look at our surrounding states, so the far left is the United States, the second bar is Alabama, then we'll just step up to Tennessee. You see Tennessee gets a lot more of the revenue from property taxes and from sales taxes than Alabama. They don't have an income tax, but they make up for that with additional property taxes and sales taxes. They have a higher corporate income tax as a percentage of their collections. And then, of course, they have a excise tax that's similar to what we have, other taxes similar to us. Mississippi is the next bar. You see their property taxes are, as a percent of the revenue, is higher than Tennessee's. And their sales taxes are less than Tennessee's. You see how that goes. You go all the way to the far right. The next to the last bar is Florida. Florida doesn't have income tax, nor does the last bar, Texas. But you see Texas has three sources of revenue, but they have well over a third of their taxes come from their property taxes. They have sales taxes, then other taxes. So this just shows you that everybody gets their revenue from somewhere. This is how we get ours, and ours is that. So let's dig into that a little bit. Property taxes. This is the property taxes paid as a percent of home occupied housing value. So what value are you assessed when you pay your property taxes? The only state lower than Alabama is Hawaii. Now, if you think about it, that's a very expensive real estate state. So they have a high real estate value and a low percentage that they assess, but we're right there with them, much lower than most other states. When you actually look at the state and property local tax collections per capita, we're the lowest in the country, and we're lowest by a large amount. That drop, but that difference between Alabama and Arkansas is pretty significant. So we have the lowest property taxes in the country. Sales tax. the bar you see that goes across the black bar is the top. That's the 4%. That's the state sales tax rate where Alabama is. So anything below that bar would have a lower state sales tax rate. There's only one state that has a lower state sales tax rate, and that's Colorado. Everybody else's state sales tax rate is higher than ours. Now, you recall last year we passed a grocery tax reduction, so a subset of this will be reduced going forward. That'll drive this number down a little bit. But our 4% state tax is the second lowest in the country. Where we're very high, though, is in that green, and you see that yellow, that red bar indicates that's because we have one of the highest state and local sales taxes in the country. Now, if you go back and look for our Constitution and the way our statutes are, we don't allow the locals, we limit the locals' ability to raise property taxes, but they can raise sales taxes. That's kind of what they've done to get their revenue. So all in, we have these, and these are rates. These aren't collections. If you look at the next page and look at the state general sales tax collection per capita, we're pretty low. You know, we have the second lowest, but we are pretty low. Now, we do have, some states don't have a sales tax, and they're shown here. But again, as we saw earlier, if they don't have a sales tax or don't have an income tax, they're getting that through property taxes or some other source. But we have one of the lower sales tax collections in the country. When you look at state and local, we get higher. This is where you see the impact of having those local taxes being higher. Individual income taxes. Some states don't have income tax, but as I've said, if they don't have income tax, they're making up for somewhere. But if you look at terms of states that do have income tax, our state income tax is on the lower end of the grid. Corporate income tax, which some states don't have corporate income tax. There again, we're certainly not the highest. We're sort of midpoint on the collections per capita on corporate income taxes. When you look at the state corporate income tax collections, this again shows you we're not high. We're low, but kind of in the middle of the grid. Other taxes. Cigarette taxes, we are very, very low compared to most states on cigarette taxes. State and local cell phone tax rates, we're not high. We're sort of in the middle of the pack. Gasoline taxes, you can see there that we are this was done on, this is tax rates. So our gasoline tax rate, which we passed the tax rate a few years ago, and that has led to the road building, and I'll show you more of that in a minute. But you can see we're about middle of the pack when it comes to the gasoline tax rates. When you look at the average price of gasoline by state, you can see that we're not the highest. Now, this was updated February the 8th. We've had a little spike recently in our numbers. Typically, for the most of the last 3 years, we've been number 44 to number 46 in revenue. I mean, in gas price per state. That's because of our access to the gas commodity, regionally. Most of the states in our region have lower gas prices, all ends. But if the point of this slide, if you look to the left, most of our, we're not out of line on all-in gas prices, and this is we're at a peak point right here. If we had not had the gas increase, we would be much lower, much like we would have on the property taxes. We also would not be able to build roads because that's the only place we can get our money from road spending. This is an interesting chart. This shows the state and the share of the state and local road spending that's covered by the state. When this chart was done a couple of years ago, only 34% of our road spending was covered by the state, which meant we relied on federal match or federal outside sources. Now you can see here, I think probably because, I'm drawing this conclusion, probably because of Rebuild Alabama and the fact we have more money to spend, we're covering a lot more of that from our state sources than the Fed. We still do matches, but that's kind of an interesting chart. But there again, we are covering most of the road spending from our gasoline taxes. Interesting here, the state spirit excise tax. We with our system of way we tax alcohol, we are one of the highest tax states when it comes to state spirits. When it comes to wine, we're right up there at the top. And then when it comes to beer, we're top. What's interesting about this chart is that the highest beer tax is Tennessee. They tend to be lower on spirits, and I wonder, there's probably a correlation or reason for that, but they tax, if you buy beer in Tennessee, you pay a heavy tax. When you put all the taxes together, everything we went through, state and local tax collections per capita, state and local tax collections per capita, even with the lowest property taxes, the highest local sales tax rate, we are the second lowest state in collections per capita in the country. Tennessee is like $30 lower per capita than us. But so when people talk about Alabama needing to cut taxes, we already are really number 49, arguably number 50, because Tennessee has a lottery, which we don't have. Where do you get your lottery money? From the same people that are paying the taxes, right? And so when you look at the lottery revenue, you can see that Alabama has none. Mississippi had about 80 million, Tennessee $500 million, Georgia $1.5 billion, Texas $2 billion, Florida $2.5 billion. I'm not advocating for or against a lottery. I'm just saying that when they look at their revenue sources, in addition to those taxes that are all higher than us, they have this source of income. And if you consider that money's also coming from the taxpayer, then Tennessee would be higher than us when it comes to their collections per capita. Debt, as a state, we're low from state debt per capita. We're low from state and local debt per capita perspective. And if you look at what we've done the last several sessions, even being one of the lower tax states in the country, the second lowest, arguably the lowest, we have continued to manage our budgets, to set up reserves, and to cut taxes. One thing we did, we're the only state, the first state, that has exempted overtime pay from taxation. We did that last session. We did the one-time tax rebate last year. We had $550 million we returned to the taxpayers. We cut grocery taxes. We cut it 1% out of the gate. We'll look for another 1% as soon as the revenue grows 3.5%. We also, prior to last session, had increased the standard deduction exemption for taxpayers who make less than $50,000 to reduce the income tax. We exempted $6,000 per person for people over age 65 who are withdrawing from a defined contribution plan. So retirees who are drawing from IRAs or defined contribution plans, we exempted $12,000 per couple. We eliminated the minimum business privilege tax. We exempted the first $40,000 of business personal property taxes from taxes, and that affected 75% of small businesses in the state. We also, all the money that was received during COVID, CARES, ARPA, any of those assistance, that was all exempt from taxation. So I just want to make the point that even though we are already starting from a very low point from a tax standpoint, we are continuing to find ways to reduce the tax burden for our citizens. And let's see what else might be interesting. We have the lowest property tax in the United States, the second lowest state sales tax rate, the second lowest state sales tax rate in the United States, and the second lowest per capita. Those were two. I didn't speak correctly on those two. And then we do, though, have one of the highest local sales tax rates, but we also have we have high taxes on alcohol and fees on alcohol taxes. So that's sort of a summary. On gasoline taxes, we're in the middle tier in terms of the taxes, but we have one of the lower commodity costs for gasoline in the country. We have no gaming revenue as we sit here today, and we have constitutional restraints and restrictions on tax policies and changes. We're limited what we can do, but we've done that. Now, the other thing I want to mention is compare other states. If you look at Alabama, we have 5 million people. Florida has 22 million. Texas has almost 30 million people. And look at their budgets. What I'm trying to say here is that when you hear that Florida has cut taxes $1 billion, what does that mean to Alabama? So basically, if you look at Alabama, $150 million to Alabama is the same as Florida doing $648 million tax cut, or Texas doing almost a $900 million tax cut. So we have cut taxes. The grocery tax we cut last year is $300 million, and that would be almost $1.5 billion in Florida, or the equivalent to $2 billion in Texas. So my point is, you've got to, when you're comparing numbers to numbers, you've got to understand the numbers. The other thing we talk about tax rate, I hear people say that, well, Alabama has a higher income tax rate than some other state, And of course, some states don't have income tax. But in Alabama, we're the only state that allow you to deduct your federal tax against your income your income. So here's an example of Missouri. Say you have a taxpayer that has $100,000 in Alabama, the federal tax would be about $17,000. So the tax base that you're going to pay tax in Alabama is $82,000 versus $100,000 in Missouri. Our 5% against their 4.5% is less money, even though it's a higher tax rate. So the federal income tax deduction is a benefit to our taxpayers that most people don't really understand. You can't just see that in the absolute rate. Then the other thing, PARCA did a study. PARCA's an independent organization, did a study, and they said that if Alabama were to take today, replace our tax structure with what's in Mississippi, then we would have $1.1 billion extra reserve today. So let me say that again. If we took Mississippi's tax structure and replaced Alabama's with that, we would have $1.1 billion more in money, revenue annually. Florida, we would have additional $1.5 billion, and Georgia, additional $1.6 billion. This is a study, you can't really see it, but what it is a stress test, and this is actually old. We now have, our reserves have improved, but when Moody's did a stress test to determine how states would fare during a recession, being a low tax state, a poor state, relatively poor state, when you take all our reserves, all of our debt, all our obligations, we are like number 18 in terms of financial stability. And there are states at the bottom of that chart that are underwater were there to be any kind of a recession. So I just want to make that point that we're a low tax state. And even being a low-tax state, we haven't stopped. We're continuing to find ways to reduce the tax burden and make Alabama a more attractive state. Economic incentives we've done that comes out of the ETF, this is all measured and prudent in our approach. But having done that, you've seen how much reserves we've built. So it's a tip of the hat, I would say, to the legislature and to the governor and to everyone for the fiscal responsibility. Now, another thing I want to refute a little bit is this business climate, because you hear that Alabama's number 41 in business climate. When you look at all the investment we have from coming all across, from all the auto plants, we're number 2 auto manufacturer in the country. The investment we have, all the game plan investments that's going to come. Yet this chart shows that we're number 41 in business climate. That just doesn't make sense to me. But if you look at that chart and study it, this would suggest that the number 1 climate for business in the country is Wyoming. Number 2 is South Dakota. Number 3 is Alaska. Florida slips in at number 4. But then you get to Montana. Do you see a theme? Nobody lives there. There's no business there. The reason is this study, this business climate, is an academic exercise that basically, if you read it, it talks about how they determine their weighting has to do with standard deviations from the mean of these calculations. And basically, if you have an income tax, you get a really low score. If you don't have income tax, you get a really high score. If so they look at do you have a tax? And if you do, then a business is going to be averse to that. But as I've already shown you, we are one of the lowest tax states. We continue to attract businesses through our economic incentives, but also because of our low taxes. So this is an academic exercise that people don't really understand what it is. I would challenge anyone, if Wyoming and South Dakota and Alaska are the number 1 business climates, then why aren't the businesses there? All right, that's a rough run through. You have a copy of it, but any questions or comments from anyone? Representative Faulkner.
Mr. Chairman, I don't know if last year was the first year you did this, but really appreciate you doing this. This is the most informative thing that, for me, as a member of this committee, and I love the way you lay it out. I know that Representative Lovern appreciates the initial slides with the planets and those pictures that help him understand that. I did have a question, and as probably at my expense, perhaps, going to your slide on state and local sales tax rates.
Yep.
And we are one of the highest. We're the 4th highest And then the next slide is state general sales tax collections per capita. And we're one of the lowest. Why is my brain having trouble deciphering between those two slides?
Well, part of it is because that's a good point. I'm glad you brought that up, because Tennessee, for example, has a lower sales tax, but they have a broader base. So you have to look at the tax rate and the base you're taxing. So when you look at Alabama, you know what we pay sales taxes on. In some states, you pay sales tax on attorney fees. You might be interested in that, but attorney fees. Yeah, you would pay sales tax on haircuts or services. So in Alabama, we have a smaller base. So the broader base, as I showed you before, a higher tax rate on a lower base gives you lower result. Here you've got a lower tax rate on a broader base. That's why Tennessee has a higher sales tax collection per capita than we do. So it has to do with the rate and the base.
So we have a high rate, but we just don't.
We have a low state rate, a high local rate, but we have a lower base than many states because we don't tax services on sales tax.
Okay. Thank you.
So I mention this too, as we think about tax credits and things that are coming, and most of the bills we get have to do with some kind of tax credit or tax exemption. In fact, everything I've got right now is just that. Is that we just have to make sure that as we do these things, we're diligent about it, that we're mindful of that good times don't always last, and that we're spending our money in the right way, and we have to be judicious in our tax exemptions and tax credits. Any other comments or questions? Representative Chestnut.
I was looking at this this tax comparison with Alabama and Missouri about how we allow federal income tax to be credited when we have to pay our actual state taxes. Do you have any idea what kind of revenue we would realize if we did not, deduct the federal tax?
Well, so there have been people, for example, there's one group that has for years wanted to cut the grocery tax, and they say they can pay for it by doing just what you suggested. If you eliminate the grocery tax on all products and did away with that, what you said there, that federal income tax deduction, they say that would be tax neutral. So I would say that the 4-cent grocery tax is $300 million. So now the 2 cents is so it'd be $600 million if you did away with the total state sales tax. Based on the information they have lobbied every year, I would assume that would be about $600 million because they say that would wash. Revenue to y'all, is that close to the mark, do you think? Okay. Any other questions? Representative Collins?
Mr. Chairman, I also want to thank you for this. I think it's really interesting, and I had made a note to say something, but then you covered it in the next slide. But that a lot of times people talk about we're not paying all the different things in our general fund equally because they only see the dollars that we appropriate. But so many of those general funds are direct funds to them that we don't have to appropriate. And your planetary system showed that so well. Thank you.
The other thing too is that we're one of the higher states in terms of earmarks. So we're one of the few states, maybe there's one or two, that have two budgets. Most states, everything goes into one pot. In our state, we have earmarks. 83% of our funds are earmarked, and we can't override those earmarks without usually a constitutional amendment. So we can't take from the general fund, the ETF. Now we have there are exceptions how you can do things around, but generally we can't do that, and we have a high earmark. So I guess what I'm saying is, with all the constraints we have, we've done pretty darn good, and we're in a great spot. And I just think it's important that we not accept the fact that people say we're paying too much tax. We all want to pay less tax, and we continue to work on that, and we'll continue. We have some tax reduction bills coming up this session that I think we'll discuss. But kudos to all of you for your work and getting us here, and revenue, and also LFO for all the help they've given us in this regard. Any other questions or comments before we leave? So reminder, you'll get packages from Karen about the budget with the governor's bill and the spreadsheet as it currently stands. Be looking forward to hearing from each of you, and then also we'll keep you. Representative Lovren, I mentioned that where the school choice will probably move in the Senate committee today. At some point, it will move down here. We're not sure. It could be next week, maybe later, but we'll be making sure that before we get to that point, we need to make sure everybody has all their questions answered about that bill, and we'll be communicating with everybody about that. Any other comments or questions? We stand adjourned.